Good morning, one and all, and I hope you are well. I have the same two pairs on watch today. Those are pound Swiss and wheat USD. So the market just messing around and chopping around as it has done for some considerable time. There are some potential entries shaping up on other pairs, but you can see very, very clearly from the structures, if you zoom out to the higher time frames, that these are very, very likely traps. So I've seen these things many, many times before. So not interested in getting involved in any traps. I'm only interested in low risk, high quality positions. Okay. The amateurs are FOMOing into the traps, and we as professionals are not doing that. We're doing the complete opposite. So pound Swiss on the higher time frames. Very, very simple, this one. Okay, again, this looks even further from being ready than it did yesterday, but who knows? Maybe it will shape up a bit sooner than we anticipate. So we have this long, long sideways correction there, and we have the start of the correction there, the origin of the move, which is there. Okay, we have near misses to it, suggesting that this is a potential high area of value for a buy, a sell rather, because we often get these near misses to such areas if we're going to commit to the downside, if we're going to tap into it and commit to the downside. The other clue that it was a high area of value, or is a high area of value for a sell, is the fact that we get a little bit of a messy kind of ending structure there. Okay, not that messy. I was just looking at the wicks, but we have an ending structure there. So we have a corrective move up with no real structure to it, at least on the higher time frames. And then right at the end, we get these drives here. We get the drive to the downside, another drive to the downside. These kind of FOMO moves. Okay, a lot of people would have been looking at these highs. Okay, highs such as that one, but you have to zoom out. Okay, it's always important to zoom out. What is the more you zoom out, the more you see. If we just zoom out to the monthly, this you can see that even on the monthly. You know, some of the other ones in there are not so clear. You can't see the near miss to it so clearly, but you can see that even on the monthly. So zooming out to see the bigger picture makes things a lot clearer and tells you what are the most attractive areas of value for a buy or a sell. So we get the 1, 2, 3, it breaks out. People, as I said, if they're too zoomed in, they won't be aware that they're trading straight into the start of a piece of structure, the most attractive area of value out of this whole range. So they get long. In this occasion, it blasts through, but not by a significant amount. Okay, what people are doing, even if this did result in a profitable buy trade, for many of the people who started buying here, what you're doing is you're constantly buying the highs. Okay, and if you're doing the same on the flip side, if you, for example, if you sold just below here without any proper confirmation, you're selling the lows and you're just going to keep getting washed out like that. So yes, you may have made profit temporarily, or you may make profit sometimes doing that, but you know, it doesn't take a genius to work out that if you wait for properties, for example, to get to record high prices and then you start buying them, and then, or you wait for your if you own a property portfolio, you wait for them to get to record low prices and then you start selling. It doesn't take a genius to work out that you're probably not going to be a very profitable property investor. Okay, that's not what the property people who own property portfolios are doing. So if you're, for example, if you did own a property portfolio and you were buying the lows and selling the highs, but you were you're doing the complete opposite in trading, then by definition, you're not treating trading like a business. And I'm actually friends with someone I went to school with who runs a successful recruitment company. Obviously a very intelligent bloke. And, but when it comes to trading, his brain literally goes out the window. And I've told him so, because he's literally just gambling. So he's not treating trading like a business, which is why he's very, very profitable in business, but not when it comes to trading. Okay. Anyway, let's carry on with this analysis. I went off on a tangent there. So we broke above. We caught people on the wrong side of the market who believe that this is not now support because we broke above. But what a lot of people are looking at is this is in the same way that if we break just below a low, for example, like for example here, we break just below, that that is a discounted price. I don't know, I've got the wrong tool there, but a discounted price for the bigger players. Okay, bargain area of value for a buy, and the same applies on the to the upside as well. Okay, so when we break just above, for many people with deep pockets, this will be an attractive, a kind of bargain area of value for a sell, if that makes sense. And what's happened? We've completely broken to the downside, which is what we see in the majority of cases. And now this looks to me like an impulse correction continuation to push lower, because we're well and truly back within the higher time frame structure. We're trading back below all of these lows. Okay, there's nothing. If I'd gotten involved here and I was holding this for the long term, I wouldn't even be considering getting out until at least there, and probably more likely there. Okay, because once again, that low stands out more clearly on the higher time frames versus that one. Okay, now one of the reasons I've got my target arrow there is because even if we do go down to there, which we may do, because that happens to be the retest of the back end of all of that, even if that were to occur, I think we'd likely get some profit taking here. Okay, at this low here, we'd probably get some deeper pullbacks, given that this is pound Swiss before we continued down to that low. Okay, now you can see we're correcting. Okay, so if we just drill down now, the thing I'm asking myself is, has price responded from somewhere? Previously, I took a loss. Remember, I recapped that in a previous video. I was looking for entries here, and we got tagged in and tagged out. So price obviously did not find enough liquidity here, and when it retested the back end of this to send it to the downside. So it then, when it did break above, it then came back down and retested all of this. Okay, yes, we have a bit of a scoop double top, but what has price responded from? It's responded from the middle of nowhere. So if it's responded from the middle of nowhere, that likely means, okay, this is probably just a middle section to push back up to tap into this high, because this high here, if we didn't find enough liquidity from these highs and by retesting the back end of this, then we're likely gravitating back towards here if we are pushing to the downside, because this move here, this sharp move up, and the move that followed was the impulsive move which broke through all of this consolidation. So there's likely liquidity here, because there must have been a big exchange of liquidity to cause price to smash through all of this. Okay, are there any clues to support that idea? Well, yep, that big wick there, for example. Okay, if we just analyze this on the 15-minute chart, how have we sold off? There's a few sharp pullback. We then get when you get a very steep correction like that, that's another clue. Okay, and that's another clue as well, that low test candle there. A lot of the time if this is a flag to push lower, when we get like that, so if we have a low test, if it starts with a low test, that's another clue that we're likely to push to the upside. Okay, if we drill out to the 4 hour, we ended on a bit of a wick. Okay, that might be another clue. So what I think is most likely at this moment in time is probably we get something more like that. We tap into one of these lows, either that one or that one. We push up. To excuse that noise, that is oyster catchers. I live in a seaside town, so sometimes we get oyster catchers which stray from the sea and venture to where we live, and then we would have something more like that. I think that's, at this moment in time, I think that's the most likely to give us that kind of structure. But just in case, so I'm trying to be a bit more, abundant in my thinking. So even if something doesn't look like ready, if I've not got much else on watch, trying to have pairs such as this on watch, just because you're kind of training your mind to think that entries are more likely to shape up, and the more you think that way, the more you're going to gravitate towards entries which do actually shape up, if that makes sense, and rather than fulfilling a prophecy that there's not much shaping up, if that makes sense. But so what I'll be looking for is I'll be looking for a tap into that area of value. Again, it doesn't look likely by the end of the day, but we shall see. And then I'll be looking for the push down, and then the 15-minute continuation. Okay. And then I would look for either an entry on the break or a reduced a risk entry within the flag, and then I'll be able to manage it down to these lows here. I don't know why my voice always does this when I make a video, but I'll be able to manage it down to these lows for something in the region of 5.5%, and then I would measure the range there, and I would be targeting 90% of the range to that low. Be targeting which would give us something in the region of nearly 7% to work with, depending on obviously the size of the flag if it was to shape up. So that is pound Swiss. You're asking for trouble, in my experience. If you're looking for flags in here, you are asking for trouble because you're likely to be tagged in, tagged out, priced to something like that. And then we get that, okay? Because price has not responded from anywhere here. It's responded from the middle of nowhere, suggesting that this is likely a middle section. So that is pound Swiss. So let's move on to wheat. Wheat, at this moment in time, I would actually say that wheat looks a little bit more likely to be ready. Just looking at this, but wheat on the higher time frames. So on the higher time frames, this is not the most standout. So because it's not the most standout, it's not as valuable as pound Swiss potentially. But what we do have is this exchange of liquidity did cause price to smash through this sharp low here. Okay, and the fact that it was a sharp move. Okay, and the exchange of liquidity that happened here still caused. There was enough to cause it to cut. There was enough to cause it to smash through a sharp low in particular. Gives me a clue that there was potentially a lot of liquidity there. Okay, so price did break above, caught people the wrong side of the market, and then moved to the downside. However, it didn't commit. Okay, so there must have been more liquidity sat above. And if we just look, we get an element of this kind of structure. Did we respond from anything on the left? Not really. No, there's nothing of any note. But we are well and truly, after that, we well and truly capitulated to the downside. And what I like about this now is that we are trading back below that low there, and we're trading back below here, okay, as well, more or less, okay. So we broke below there. So if we get a correction underneath here, then this is obviously not a retest of the back end of this, okay. And then we potentially could be looking for that impulse correction continuation to push lower. And if the continuation leg was of a similar length to the preceding impulse, which it often is, that would take us down to these areas, okay. And I've got my target area there. I'll explain that in a minute. But you can see the footprint. Big impulsive move down. Price left a footprint. Price usually gravitates back towards that footprint because the bigger players know that's likely where the liquidity is. It was a sharp move as well. And I said to you in yesterday's video that I thought that even though I was looking for this to shape up yesterday, I thought because we'd kind of come from a more impulsive move than the corrective pullback which preceded it, I said to you I likely thought that this would likely come down to this area to find liquidity from there, to then push up to here to give us that kind of structure, okay, before the move to the downside. It does still look like that at this moment in time, but once again, just in case price shapes up a little bit more, the entry shapes up a little bit more quickly, given that we have now retraced about 90% of this move, okay, so we pull back about 90% of this move now, and if we did react from here, okay, the alerts are all going off again. If we did react from there, we would have had, some kind of base to work with. Okay, and we would still have a middle section. What I'll be looking for, I don't know what pair that was. What pair was that going off? Okay, it's saying alerts log Kiwi Yen. Okay, right. So what I'll be looking for with all of that in mind is the following. I'll be looking for a tap into the area of value, a push down, and in this instance, a 5-minute continuation, because there's nothing above here. There's nothing above here until all the way up here. So I would be very satisfied with a tap into the area, a push down, and a 5-minute continuation. Or if we got the 15-minute continuation, that's fine. Look for an entry on the break or within it. The stop loss looks a bit strange, but that's just because the pip ranges are a little bit different with wheat USD. And then I'll be able to manage it down to here for something in the region of 2%. And then my target in this instance, so I would measure from the range that I was trading within to the 90% area of the whole. What the hell has happened here? Of the whole structure, and that would be there. So I would set a take profit at this low, which is sat just above, and that would give us something in the region of 8.5% to work with. Okay, and as I said yesterday, if we measure this, where is it? There we go. If we measure this whole impulse to the downside, and we assume that the continuation leg is of a similar length, the move would take us all the way down to there. The 90% area, if you're wondering, if you're new to my videos, why I would set a take profit there, that is often where price pulls back, and you can test this. Even if it is going to continue in the forecasted direction, this is often where you might get steeper pullbacks like this, for example, before it continues. And then, of course, if you're sitting through that, you're giving back maybe 4 or 5% of your profit. Price will often pull back 50% of the length of the impulse. So if we impulsed all the way down from here, we may pull back about 50% of the range before continuing. So then, therefore, if you're going to sit through that, you've got to assume that you've got to hope that it does actually continue in your forecasted direction, and potentially you're sitting through a trade which consolidates sideways for about a week and then may not commit in any case. So that's the logic behind the 90% area of a range. Okay. We don't need to, hold things forever. All we need to do is be able to get in, get out, take our profit, and move on to the next trade. And the point of that is, as well, if you're trading for, say, let's say £1 million account, do you want to sit through 60, 70, potentially £80,000 pullbacks sometimes, okay, in the hope that price continues in your forecasted direction, when you may sit through all that and then it doesn't, okay? And of course, you've got financing, overnight financing fees that you have to consider. When you're holding a position for a week, you're paying overnight financing fees on holding that position. But anyway, that is what I'm going to be looking for today from these pairs. If anything shapes up, just as I always do, I will bring you a trade recap of any trades that I take, and I will break down potentially any trades that I decide not to take. And full transparency as usual. Have a great rest of your day, folks. Have a great weekend. And I will be back next week with more of these trading tutorial videos. Thank you very much indeed for watching.